Welcome everybody back to Take the Hill, which is a leadership podcast connecting you to influential individuals exhibiting great leadership and exploring the human side of leadership. So, welcome back, Angelo and Dennis.
Good morning, everybody.
Yeah, good morning.
Fantastic and wonderful to have you here. So, we are excited again to have one of our close friends and colleagues back in the studio, Mr. Steve Adelkoff. Welcome to the show again, sir.
Thank you so much, Doctor. It's a pleasure to join you guys.
Well, it is exciting. So, if you have not checked out Steve's earlier podcasts, we highly recommend that you go back and take a look at those two, beginning with number 9 and number 11, right, where we talk about what is next over the horizon, where you get a good introduction to Steve and some of his background. And then number 17, TikTok and Week Chat, another event that's still somewhat ongoing. We'll kind of see the direction that takes. But today, our focus is going to be on what is happening in the stock market and the financial industry right now uh, with Reddit and Robinhood, and taking a look at a couple stocks that are being influenced by a particular group of investors. So, Dennis, if you want to advance the slides here, what's particularly interesting, and Steve, I just want to jump right in it, right? So, because I know you have a lot of insight and wisdom as it relates to this, but I tried to come up with, just at least a paradigm for our listeners. All right. So if you don't really know what's happening and you're kind of just following along and you don't really have maybe a full backsight, to me, it almost seems like, and we see this play out in history, where you identify some advantage. Right? In this case, it was the day traders, or those quick time stock sales, and the ability to get into the stock market and not necessarily go through a larger brokerage or institutional investor. And they identify some leverage, but then eventually that becomes known, and then there's resultant either turmoil or change, and everybody jumps on board. And so it's like this paradigm from my perspective. So are we close, I guess, in our thinking?
I love you, Patrick, but no.
Perfect. All right. That's fantastic.
I do love you. I'd love you like a brother. So, I understand what you're saying. You raise
Mhm.
an interesting point. I gotta tell you though, I think that this what's going on right now is this really fascinating push that it's a confluence of events where uh, uh, trading and the markets have been pushed down to the retail investor who, as a sort of collective conscience, is just trying to figure out how to flex its muscle. And sites like Robinhood and frankly TD Ameritrade and right now you can be in the park and trade stock. You combine that with uh, a pointing the finger of the bad guy, and in this case, really focusing on the short sellers, the institutional short sellers, and uh, they're doing something called a short squeeze, and they're driving valuations into places that are absolutely ridiculous. And let me just give you a disclaimer here, because I do hold my broker dealer license, and it's important for the broker dealer where my license is INTE Securities that I say I don't provide financial advice, and what I'm doing here is really in connection with anything but financial advice. But Patrick, what I think we're seeing right now is a newfound power with the retail investors who also have a social bent, who have just focused a lot of anger on these short sellers. And I get it to a certain extent. I don't get it. I think that those angry people don't realize that short sellers actually did some great things in this world. We can discuss that, but there it is.
Yeah. So, and thank you for that clarification. And that's what I love, right? So, and that's why we're here to learn more about clarifying our perspective. But why do you think that anger, or why was it projected in this case toward that group of individual sellers?
I've been thinking about that since I heard about this. And by the way, I heard about this yesterday morning when a very dear close friend of mine, who's a 20-something person, this person doesn't really invest in the market, but has a lot of strong social value, very passionate about social issues. And this person said, "Hey, did you see what's going on with GameStop and Reddit?" And I didn't. And then this person was like, "I'm going to take my last $300 and buy a share of GameStop, and I'm going to just ride this thing to the end because, damn it, there's bad people out there." I, I'm not quite sure why, but I can offer this. And in fairness, there's some countries that just outlaw short selling. So when we were doing the Sharia funds years ago, and the whole strategy was to come up with a Sharia compliant way to do a long short hedge fund, and the short side of it is what we're talking about here. You couldn't trade that in many countries, including, I believe, still the UAE. So short sellers do have this negative thing. But let me tell you something, guys, and we're gonna have this in my class in 2 weeks when we study Enron. The guy who blew the lid off of Enron in the investment community, not the reporting community, that was Forbes, but the guy who blew it off in the investment community is a guy named Jim Chanos. You'll see Jim on CNBC, Bloomberg, what have you. Probably the most famous short seller out there, and he was the one who took Enron down and discovered the fraud. So there's a yin and a yang. There's a memory that can be sometimes short. If you're a 20-something and you're investing in the market, you weren't even alive during Enron, so you wouldn't remember what the short seller did that was actually quite favorable for the market. I don't know if I'm answering it or not. I don't know why the hell everybody's necessarily mad.
Yeah, and like you said, that I think that would probably be something that maybe comes out in the future. As you said, memories are both short and long, so that may surface eventually down the road. But again, right now, why? I mean, who really knows? So, in terms of walking us through some of the major players, right now, can you talk a little bit about who retail investors are versus maybe the more traditional traders?
Absolutely happy to. Do the institutionals because they're longer in the tooth. Institutional investors, particularly, we're looking at investment banks, hedge funds, mutual funds are a huge player in this. All of those people that you're listing, probably not equity firms. When I think of that, I think of private equity. They're probably not trading stocks. They're more buying businesses and selling businesses. Endowments money is often managed by the investment banks, the hedge funds, the money managers. But these are the guys who spend a lot of time thinking about which companies are going to produce the great returns, which companies are not. They have a strategy, and now we're talking about my certified alternative investment analyst designation here. Yeah, the CAIA. And they come up with strategies to invest. One strategy is a short sale, and in this case, a lot of institutional money piled into GameStop. We saw, short positions of 150% of the stock. I just don't know how you get there. We'll talk about a short squeeze later. So, those are those players. They're managing pension money. They're managing high net worth individuals. They're managing endowment money, foundational money, large chunks of money that come together. The asset management world is a huge and fairly and lucrative world for the big financial money centers. Then there's this new group for whom I'm not sure we've really fully come to terms with its strength as a collective conscious, and it's retail investors, and that's individuals. They can now get on RobinHood and buy, fractional shares of Berkshire Hathaway or what have you. And by the way, it's not just the RobinHood, although that's a great app that provides access to the market for more individuals, which is a great thing. That can only be a great thing. It's also TD Ameritrade, Schwab, etc. It's people taking $300, $3,000, $30,000, $300,000, and picking their own stocks and deciding what their investment fate is, and moving away from the professional money managers and doing it themselves. And I think what's unusual about this one is they seem to, the retail side of this, by the way, when I say the retail side of it, we don't know what the muscle is. There's just a ton of retail money in the market. So when you go on these Reddit sites and you see, and you get excitement saying, be damned, those short sellers on GameStop, go bid it up so that they have a short squeeze, which we'll talk about later. I don't know how many billions of dollars there could be there, but that's a lot of power. And I got to tell you, that has a market manipulation smell to it that is just, from a securities law perspective, it's a little mind-numbing to wrap one's mind around it. It's not just like a classic. It's not a pump and dump, which we've heard of, Wolf of Wall Street stuff. That's not what this is. This is a group coming together saying, "I hate you, short sellers. We're going to have a gazillion people buy the stock and screw you." It's market manipulation. I don't seem to think that that's illegal. It's crazy. There you go.
Yeah.
Hey,
Yeah, and
Steve,
Good.
I'm sorry.
Yeah, go ahead, Dennis.
Hey, well, once again, you're always bringing something that I'm just not aware of, or maybe don't quite understand. But where do you find all these people? I mean, these groups of people. How do they find people to do this? Or is this like connected to our economy? Or I guess I'm just not understanding. How do they get that many people to act at one moment to as you say, screw the short seller? I just that just seems almost impossible to do.
I so agree. I don't know. And that leads me to conclude that sites like Reddit have more, I don't know if power is the right word, but more influence than certainly than I ever imagined. I I don't think anybody's seen anything like this before. I don't know. I hearken back to Malcolm Gladwell's tipping point, as maybe finding some clues there. One of his first, it might have think it was his first book. Um, but I don't have an answer to that. I have no idea, but they sure got on the bandwagon, and man, I mean, the proof is in the data. Unbelievable.
Yeah, and I like that reference back because the tipping point. You're right. When you're looking at systems and you're seeing these kind of not necessarily invisible powers, but there's influencers in the market that eventually come to bear when the conditions are right. And the point that I'm reading and I'm hearing a lot, as you said, Steve, is you know the power of these sites, be it Reddit or anywhere else on the internet, to bring that much influence to institutions which normally held the power in the past. Uh, in more contemporary times, it seems to be really shaking the core, I guess, foundations of a lot of industries or organizations, such as the stock market, right? Um, you can go back in history. Even I'm just going to pull up, for example, the Arab Spring, right? I mean, is a great example of leveraging social media apps to pull individuals together to achieve a particular result. And I think maybe we're seeing some of this same thing happen now, where again, Reddit or whatever platform you want to use was the vehicle through which you were able just to very quickly build this mass movement towards a particular cause.
Uh, I hear you. It absolutely. And how fascinating, right? Just how absolutely fascinating. I also have to tell you though, um, all well and good to squeeze shorts and make hedge
Mhm.
fund guys lose a lot of money. Um, but number one, um, you may be cutting off your nose to spite your face because the valuations. I mean, you listen to people in CNBC, Bloomberg. Everybody says the GameStop valuation is just nuts, absolutely nuts. I don't know. Again, I don't provide financial advice. My broker dealer, but it's sure. Yeah, last I looked, they don't even have earnings, right? And this is a brick and mortar company. Wow, and it just went out of sight. For social reasons. So that's one side of it, and the other side of it is I know a lot of hedge fund people. I know a lot of asset managers. I know a lot of investment bankers. These are smart people. They look at this and they say, um, I learned something. I got burned on this trade, and then they move on to the next trade is what they're going to do. Uh, and they're very strong in believing that one mistake is a lesson. The same mistake twice is a hanging offense. I promise you, they're smarter than all of us and a collective conscience as well. And that social group can chase as much as it's going to chase, but you continue to do it. Ultimately, we're going to run out of money.
Yeah,
Yes. Oh,
that's the interesting element is again, we look at these events and I think, individuals seem at times to be very quick to judge, right? And almost, armchair quarterback. But the point that you had said, and I remind my students of the same thing, right? These are really smart individuals, right? In most cases. Um, and I think they know more sometimes than we give them credit for in terms of being able to leverage technology to get their word out. Like you said, that they are intelligent, you know, right? Just real quickly before we continue, because there's lots of good stuff I want to get to. I at least want to introduce a couple of the other players, be it GameStop, be it Robinhood, just so again our audience kind of understands kind of all we're talking about, before we get into some of the other fascinating elements. So GameStop themselves, like I said, is an American video game consumer electronics and gaming merchandise retailer. All right, they're headquartered in Grapevine, Texas. What's interesting, like I said about GameStop, again, like I said, they are with the video game market kind of shifting. And like I said, there's a lot of changes in that industry right now, between these physical brick and mortar locations and a lot of movement towards more web-based virtual downloading games. Right, so you have a tug and pull kind of in that industry right now itself. Right, if you advance the slides, we will also see another player in this game, as you mentioned, is Robinhood. All right, so Robinhood themselves, as you mentioned earlier, is a vehicle through which individuals are able to make trades within the stock market, right? Buy, purchase, sell, and hold stocks, for example. So, you know, those two entities are kind of front and center right now, and is Reddit. All right, so Reddit is kind of an aggregator. All right, so it's that provides the vehicle through which individuals can connect, communicate, share ideas, and again, the ability to vote on the popularity of certain threads and certain lines of discussions. But it's the ability that brings people together, all right, around an idea. So the idea of these short sellers, Steve, you talked about. Can you explain that process a little bit more?
Sure, absolutely. So you could buy stock and
Mhm.
hold it forever and a day. You could buy,
Sure.
I can give shares to your friends, blah blah blah. Or if you want to bet that a company is going to lose value, you can do something called sell short.
Mhm.
The playbook is to borrow stock from a broker dealer who keeps this kind of stock in reserve so that you can borrow those shares and then sell it in the market on the same day and take the cash. And then you wait till the shares drop in price. And when they drop in price, you go back into the market and buy it at the lower price and return those specific shares to the broker. And you keep the difference. So when it goes down, you win. Now, a couple of things about short selling. Number one, the payoff is not symmetric. So on the upside, you're capped at how much you can make because it can only go down to zero, right? So you know a maximum amount of what you can make, and if it goes down to zero, there you go. But the amount of loss, in theory, all things being equal, if you haven't done something else, is unlimited because the shares could just keep going up, 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 and you keep paying, because when you got to go back into the market, you got to buy the stock at an unlimited price or at some price. So as a strategy, it's a difficult one for retail investors to execute. You got to be good. You got to be a good trader. Don't try this at home, kids, kind of thing. Pros do it, and even pros get burned. So that's number one. Number two, I think it's fair to say that you could certainly short stocks in the traditional way that I was describing, or you can use options through puts and calls and achieve something similar for a lot less risk. And I do expect that a lot of the short interest and obviously there was a hell of a lot of short interest. It was like 150% of the stock that's trading. So somebody out there many out there were doing a lot of shorts. But you could replicate that, maybe not exactly, but you could certainly come close to replicating that using options and not have that payoff of unlimited loss. And I suspect a lot more of that was out there. And by the way, those people those institutions probably did not get hurt as badly because you place smaller bets for bigger gains, and the bets hit more infrequently. But then there's one other thing, the short squeeze. And that's what this is all about. So here's how that one works. This is like a bad dream for a trader, right? This is a bad day. Stock starts going up, and through either regulatory margin calls or good sense or whatever, the trader says, "Time to get out. I'm taking a bath," and you sell into the market. Because remember, you don't sell in the market, you go back into the market to buy the stock. Well, if you have all these shorts buying stock from the market, what happens to the price? The price goes up, 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 and you lose more and more and more. And that's called a short squeeze, because as time goes on, you're losing more and more money because everybody's out there buying the stock. You're getting squeezed out is the nomenclature. So in what happened 2 days ago, I don't know for sure. Somebody's going to tell us when they look at the data, but I suspect what happened was that the retail investors sort of got the ball rolling and really jabbed it. And there might have been logarithms out there that said to the short seller, you got to sell because it hit a certain trigger. And once those guys cleared out, the price jumped some more. And by the time you had the traders who were not on automatic trading, I don't know if any of those are left, the price is now up 1,000%, and the squeeze is so hard you need to go to the hospital. That, I think, had a lot to do with it. It wasn't just the retail investors who flexed their muscle and drove the stock price up. They just did it enough so that the short squeeze came in and the institutionals got hurt.
So when you look at this, the idea that obviously the retail investors are able to influence the market, absolutely. Is there any benefit then to the actual company that they're influencing, such as what we're seeing here? I mean, is GameStop actually benefiting by this in any way?
Fantastic question. And I was getting my workout in this morning at 6:30, thinking about that very question. The Sports Center was on, but I was nonetheless thinking about that question. It's a little perverse, but the answer is maybe. So let's take AMC, for example, and who could not love a good movie theater, other than it's in the pandemic, they've been losing their shirt. But if you ever hear the CEO, he's just a charming guy. If you listen to him on CNBC, and he's really, they're doing as deep thinking as they can on how to save their business, their industry. all of a sudden his valuation is significantly higher. And now the lenders in the world say, maybe I've got stronger collateral than I thought. So all the treasury shares, for example, that the company would hold are in theory worth more. The balance sheet, in theory, could be worth more. Let's remember when Hertz went bankrupt, they issued stock out of in chapter 11 and in bankruptcy, mind-boggling that anyone would buy the stock, but they issued stock and they had value, and the stock price went up, and that helped them, I think, do their thing. So yeah, higher valuation means higher stock price, of course, means perhaps better balance sheet and perhaps more significant access to capital. And then, and what we heard today, I believe it was RobinHood who tapped their credit lines, which it's not unusual because you know, um, the quasi-regulators and the regulators and the self-policing organizations basically were requiring all BDs, including Robinhood, to sort of beef up how much cash and reserves they had so that they could settle these trades in 2 or 3 days. That's coming down the pike with all of this GameStop stuff. You saw them tap the market. So if there's one benefit, that's.
Hey, Steve, I got a question. Actually, I got 2 questions, and I don't know if either one makes sense, but I'm going to throw them out there anyway. But it seems like we're talking about the big fish. We're talking about all the big investors and everything. But how's this impact the small investor? I mean, who doesn't quite understand? Someone like me who doesn't really understand what's going on. And I mean, does it hurt them? Does it help them? I don't know.
I think there's a lot of worry out there right now about the retail investor and getting hurt. So I heard the former SEC chair who just stepped down speak yesterday about this. You hear Mark Cuban talk about it, and a number of others. Um, One thing that's gone on with this sort of social pounding of the chest against short sellers is that the stock prices has gone so high, it doesn't seem to have a rational relation to fundamentals. And that means that you could have a bubble. And when the bubble bursts, it's the small guy who's going to be hurt the most. Um, that's one risk. I think also the government is looking at this and they're saying, "Mm, people moving in and out of these stocks, the short-term trading, not having sort of a long-term vision of investment, where an investment is not I buy a stock today and I sell it tomorrow. Investment is I like this company, I want to be part owner of the company, so I'm going to buy some shares in the company, I'm going to hold it and see what happens. Trading is buying and figuring out when the next way to get out of it is. Now, there's a lot of professionals who do it, and many do it well. There's a lot of amateurs who do it, and I doubt they do it as well as the professionals, at least not to start with, but, okay. But the government generally is not, is suspicious of fast trading, moving in and out of stocks, not thinking about fundamentals, trading away from fundamentals and building up asset prices. But there's a lot of other things going on in the world that influence that too. And it's a dangerous world out there right now. So yeah, I don't think that this is always great for the retail investor. And when I hear, particularly that friend that I referenced earlier, when I hear this person say, I'm in it for the social good. I'm passionate about the social good, and I'm willing to ride this investment down to zero. I sort of say, that's not a good economic reason to do it. I suppose it could be a good social reason that I don't want to dismiss, but it's a bad.
My second question, and again, I'm just trying to wrap my brain around all this, and but I see these are companies that are probably in trouble financially, And it reminds me of the music industry when, everybody was, I mean, back in the day, it was records and then went to, but now we have the downloading and again, you see everything shifting to, I mean, I think the music industry was worried about, well, how are they going to make money? And I don't know if this is the same thing. Like you have companies that are trying to shift the way the market is, or I mean, I guess I'm trying to again wrap my brain around why are they doing it. I mean, is it just to make a quick buck, or I don't know. I guess I'm confused. Excuse me.
Sure. Dennis, I am too. I share that. I mean, there is this social feel that you get that we don't like short sellers. They're bad for companies, and so we're going to squeeze them and make them feel the pain. And certainly this revolution of trading using apps and Robinhood and TD Ameritrade, of course, Schwab. I mean, it's wide open trading for the retail investor. Can even do options and get into some real hairy stuff. But I share that. I just uh, uh, I share it. And I'll tell you what. And in fact, well, you guys tell me when it's time for me to ask you guys questions.
Yeah, I think that's coming soon, no doubt. One of the because we did talk about those apps, like you said, Schwab and Robinhood and TD Ameritrade, and I mean I have the same thing through TD Ameritrade, right? So I mean we all dabble in it, but from their perspective, like you said, I think the influence and the resulting actions that have happened are not necessarily understood by the investors or the individuals who are pushing some of these trades recently. For example, and correct me if I'm interpreting this wrong, but the reason that Robinhood stopped trading, which is another maybe discussion line in and of itself, is because of the legality and the SEC rules and requirements in the first place, not because they wanted to influence the market per se, but because they essentially needed to protect their own company, right? So in terms of the, these individuals, like I said, who provide the opportunity to, for the retail investors, what is the impact on them moving forward? As a result, are they going to be under increased scrutiny? Is the SEC maybe going to watch the number of players in that field, perhaps, right? Because now you've maybe have demonstrated that you can literally open the market and wield this power. Maybe this group is going to be facing more restrictions in the end, perhaps.
You raise a fantastic point. And let's remember, the securities trading industry is one of the most highly regulated industries there is, for good reason. I mean, just for me to be able to get my Series 7, 63, and 24 took quite some time. And that's like a small sliver of mammoth industry. So you're absolutely right. And the CEO of Robinhood got on the horn today and said, "Hey, look, what do you want from my life?" The regulators and the quasi regulators came in and said, "I got to stop it." Yeah, and that's the only right thing to do. We're not making a fluid market in this thing; it's upside down, and I have no choice. And he's right. The SEC is going to be looking at this. We've already heard. It's fascinating. We've already heard Elizabeth Warren say, "What's going on?" And Senator Warren, if she gets a bee in her bonnet, she's going to look at it hard. And she's come up with some fantastic legislation when she has a bee in her bonnet, and not only when she has a bee in her bonnet. A lot of others are looking at this and saying, do we need more regulation? A guy from the SEC got an older guy, a former SEC guy, not the chairman. He was, I think, an SEC lawyer. Was also on the Talking Head show, saying, we probably have enough regulation to control retail investing. We just have to apply it and maybe tweak it, because we're talking about sort of a brave new world in many ways. But I'm telling you, I think the thing that scares the people the most is that the trading it seems to be dislocated from economics, dislocated from fundamentals, dislocating from what we think is rational in investing and moving. Everybody seems to be saying we hate those short sellers, not we love GameStop. Stop.
Yeah, and I think this is maybe a good point, like you said, to hand the keys over to you a little bit in terms of firing some questions our way. Because, like you said, as I'm looking at it, and through your help this morning, I think it's certainly making a lot more sense. But systemically, again, if you look at the individual components and what they normally would do in terms of their respective roles, it's just another interesting break from, I'll use the word tradition, I suppose.
So let me ask you guys something. You know how I love to ask you questions, and remember, my view is that this is the year of the moderate. President Biden is, I think he's doing a fantastic job, and he's talking about down the center of the fairway. It's really the year of the moderate. One thing happened, I think it was yesterday. AOC, Representative AOC, and Senator Cruz basically took the same position that RobinHood should have never stopped trading on the stock. So you got you've got a far left politician, a far right politician, and they have the same view about Robinhood trading stock. Is it the year of the moderate? Are those extremists going to come together? And what's going on with that, guys?
Who's first? I certainly have some ideas. Dennis and Angelo, do you want to jump in before me, or do you want me to fire away?
Wow, I don't know. I'm just when it comes to politics, Patrick knows my politics, and I'm a little bit. I think you bring up a great point, Stephen. And again, I may be way off here, but I think we're looking back during the Clinton administration, where everybody started to come to the middle to get something done. If we look at the recent history, we were so divided and so far apart that nothing really was. A lot of things weren't getting done that needed to be getting done. I'm hoping that politicians are recognizing that, hey, it's time whether to put aside their differences and maybe come to the middle and start getting some things done that need to be done. I don't know. That's just kind of how I see it. I mean, that's why I believe Clinton was successful as a president, other than his other extra activities that he participated in. Um, but I think he was willing to come to the middle and work with both sides. So if we can do that and see that, again, it may be one of those years or one of those administrations that this happens. I don't know. Or are we going to stay split? I can't answer that, but I think that I hope they can. I hope they can come together and work. But and again, what you said about those two, a far left, far right, coming together and agreeing on something is, and compared to what's happened recently, that's really odd. So I could see it happening like it did in the Clinton administration, maybe.
What do you think, Angelo?
Part of me is glad that I'm not being asked to talk about the investment stuff. Because that is so complicated. But just to speak to it very quickly, somebody who's never, ever really had a hand in that, if anything, I mean, this brought it into my sphere, like I'm at least like interested a little bit more in what all this is. I think I've learned a lot more about this stuff in the last couple days, but I could have told you 5, 7, 8 years ago that GameStop is going down. They've been trying to sell and get rid of their product for a long time. So I just find it intriguing how a company that like has just been so low and so down, like just gets all this flame. I guess the world is an interesting place. But on the topic of the year of the moderate, I actually, and I don't like to really play against the grain too much, but I would actually even challenge that slightly, just because I feel like that's what people want on the surface, but I just don't know if that's what we're gonna get. I think that people want moderation, but I feel like there's just way too big of a pendulum swing for it to land in the middle. You're seeing like this GameStop stuff with the investment, right? I mean, that's craziness. There's nothing moderated about that. That's just craziness, right? I think that with executive actions, and I'm not against what's happening, I think that you're just going to see a larger swing of the pendulum, and I think it's going to pass the moderation part, or moderate part, I guess is the better way of saying it.
Yeah, and so this is again, and I love the question, Steve. It's really good. I I'm always going to go back to systems theory here, right? Because again, I'm looking at it holistically, as well as maybe what are the individual elements doing, and with how AOC and Ted Cruz happened to come together on that one particular point of Robinhood needing to continue to trade. I think, if you look at any event where there's conflict or instability, I think there's always going to be points of alignment, and it just so happened that point of alignment was illuminated very quickly, right, in this case. But I still think there's much that are on separate sides of the fence in terms of their actions and beliefs, and what they want to see in terms of their vision. um, I do like the year of the moderate in terms of the vision. The execution or the I can't use the big words today. That coming together and actually coming to fruition, as Angelo said, my I'm not there yet, because again, I think I don't know if it's just historically where we have been over the last 5 to 6 years. If we're able to correct as quickly as we would like, there's always a delay in the system in terms of, okay, we have this vision, this is where we want to go, right? It takes time for that to be implemented, and I don't know if 1 year, 2 years, or 4 years is enough time to see that happen. And I think the same thing as you get into the financial elements in the industry here, you're seeing the same thing. I think if you look at how things change, it either requires a strong vision from the top that the leaders or whoever they are out front put forth, the people buy into, or you have a critical mass that basically it basically makes change happen. And I think what has happened is we have a critical mass that has realized that they have the power to influence these very traditional organizations that have held the power in the past. And but it's almost like when you get the keys of your first Ferrari, right? And you get in that car and you fire it up and you just hit the gas, and then you realize, holy crap, I have 400 horses behind me and I'm out of control right now.
Patrick, how many Ferraris do you have? The
Yeah,
key
I
to
was
your
going to ask
first
that.
Ferrari? What
I was going to say the keys to your first
like
Ferrari. I'm sending you.
I don't know. I'm trying to relate to the listener here. I mean, I could have said like F-16 or my Cessna 182 Centurion, but I mean, no one's
you're
going to
the
connect to
model,
that.
you're the
Right.
model, your first Ferrari, right?
Hey, the fact
I
that I got to
love
jump
that.
up
I
to a
love.
Chevy Geo, it was, a big step for me.
So yeah, I mean, it's yes. So I'm sticking with Ferrari, right? It's like it's when you get that power, right? And all of a sudden you realize you have the vehicle, the tool, and the backing by all your compadres, and you're going to go do it. And I think you get this myopic vision, and you kind of forget about everything that's really happening outside, and you get this collateral damage, which is what I'm seeing. I'm going to stop talking now,
Great
Steve.
answers, guys. Some really great answers. And look, I have to say, the year of the moderate isn't the most sexy media thing. It's not like that's gonna really make it's not gonna make a Reddit board anytime soon. That's for sure. Let me throw one other question out at you, if I may. Um, as we know, tax issues are always first and foremost on my mind. Just as a business lawyer, we just think, breathe, and eat taxes. It's an important thing. In this case, we're hearing a lot of noise about the short-term nature of the retail investors' trading psyche, and there's a lot of noise from the government about um, wanting to influence, incentivize longer term thinking and a longer term horizon when investing. And it seems that most professionals in the industry think that's a good idea. Yet, the best way to encourage long term investing is to provide a lower tax rate for long-term capital gains. And certainly what's telegraphed by the Biden administration is that one tax provision they're going to attack is the favorable capital gains rate. So in other words, if you read, if we can believe the noise out there, the Biden administration would like to have the same tax rate for capital gains as ordinary income, which would remove the incentive for long-term holding of investments. Tell me how we're going to square that, guys.
That's a really good question. You're right, because again,
Well,
historically, I mean, the reason that you lowered the capital gains tax is because, as you said, I believe, correct me if I'm wrong, it's because you want to encourage that long-term investment and staying in the market, right? I'm going to pass to Dennis and put him on the spot.
well, I don't know much about taxes, but probably what I would have to do is probably sell one of my Ferraris. And I don't know if I can answer that question, to be honest with you. Wow. I mean, do we think it's going to happen? I mean, yeah, I don't know. I don't know how, because if people aren't investing, and I mean, how's that impact the economy? I mean, I'm not an economist by any means, but I know that when you don't have people investing and you don't have money in the markets and you don't have people, you know, doing that, that it actually impacts the economy. And again, I think it goes back to what you were saying, Steve. It's going to hurt the small guy more so than the big guy. But wow, I don't know enough about it to really talk about it. But I don't know. What's the benefit of doing that? Is, I guess I would ask.
I would also add on to that question in terms of the benefit. Would organizations within industry therefore struggle because, again, I think long term, wouldn't they necessarily be losing working capital?
Um, Good question. Good question. And the noise from the regulators has always signaled we value long-term investment, we value long-term thinking, not short-term thinking, and in fact, and perhaps that holds a key to why the retail investor is so has such disdain for a short seller. That's generally, short selling is generally a shorter term horizon in investment. You don't leave it out there that long because you just have too much swing. So that might be a part of it. I can also tell you this though. Chairman Jerome Powell said something, I think it was yesterday, that sent just, it might have been the day before, it sent chills up and down my spine, and I'm still having chills go up and down my spine when Chairman Powell said there really doesn't seem to be a correlation anymore between interest rates and asset values. If you're a finance person, if you think about like the world of economics and finance, it's a fundamental law, a fundamental paradigm that interest rates and asset values are like, so intertwined that it's you can't have a discussion with one without the other. And with rates being held artificially low for so long, we've talked about this. It's like an opioid going into the economy and continuing boom, 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 boom. Eventually, there's going to be some burnout there. But what he's saying is, forget it. The Fed's view is we're going to keep this government financial repression going and interest rates held down low. And you know what? That doesn't mean assets are going to bubble and continue to go out of control.
Hey, Steve, do you think that like these world, I'm talking like global finance people who are, you never hear of, the big money makers who make these huge decisions about economies and so forth, do you think they're trying to build a new paradigm? They're trying to shift away from the way things were and trying to create this new, I don't know, I can't even wrap my brain around it. But are these people behind it pulling strings, trying to manipulate something so that they, in the end, will be okay? I don't know.
Dennis, I look at it a little different. Who knows, right? Now, I certainly do. This is how I look at it, though. Uh, 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 and remember, I'm in the middle of teaching a global financial crisis class for my very dear for the program at Rutgers, which is just a fantastic program there, in political science, master's in political science. Um, I think central bankers are in a bind. I think central bankers have fed on low interest rates that they've artificially held down through various um, using various tools in the kit, and they can't get off of it. And for almost 20 years now, it's by and large worked, but I don't know where it's going. I mean, right now, if you're a fixed income investor, you can't get yield anywhere. The government is sort of encouraging us to take more risk and invest in the stock market and other more risky assets than credit. Um, it's like taking amphetamines for 20 years. Something you're going to have a heart attack somewhere along the line, and I think if you watch and when you think about the pandemic and how we're going to get out of it and how that's all going to what boats will rise with that, you hear. Professor Carmen Reinhardt, who's the chief economist for World Bank and I think a latent Nobel laureate, and she and Professor Rogoff wrote the book "This Time Is Different," where they chronicle the 800 years of sovereign defaults. Professor Reinhardt looks at it and says, the emerging markets are just, we got to really worry about them. We're going to see defaults that could be devastating in that world if interest rates rise, if commodity prices don't hold up, if various scenarios happen. And by the way, the US and China and the European Union could pull out of this just fine, and those emerging markets could be crushed. And these are serious problems that we're going to confront. GameStop shooting up 1,200%. That's and a couple institutions getting a short squeeze. That's small stuff compared to an emerging market country going bankrupt and the devastation.
Yeah, and I go back to maybe our theme of the year is going to be perhaps year of the disruption, right? Um, Only because when I think of everything that's happening, I mean, you could pick your industry, all right. It seems like everything was marching along, quite smoothly for the most part. And again, we at least in the United States, and I think most countries around the world, are relatively stable. And we've had almost like this series of dominoes where across the globe, we're now entering this period of disruption and instability, and on so many fronts we're looking to see if the system is going to, as it normally does, self-correct, right, to regain stability, right, whether that's with the same elements or it changes in some way, or will it continue to be disrupted and go through a longer period of time and instability where it just completely reshapes the dynamic and understanding of what that system is. So I mean, maybe I guess that's probably the easiest way to characterize kind of where I'm at in terms of looking at what's happening in this market and other areas around the world,
The year of
perhaps.
the disruption is certainly a lot sexier than the year of the moderate. That's for sure.
Well, we can certainly combine them together. Who knows? Right.
Uh,
But and I don't know that I have the answer. And I think it's interesting. Like you said, you look back at these events, regardless, politically, economically, um, even if it relates to an individual industry or organization, these major disruptions, you're almost sitting back and it's hard to really see it when it's happening because, like you said, it's so dynamic, and you never know which variable is going to change the course at any given point in time. And it's not until you give yourself the time and the space and the distance to either look back or to take that 30,000-foot view to realize, oh, okay, here's what's happening. And that would be really hard to see during the period of time that you're actually in it, because again, it's just not normal day-to-day stuff that you're typically accustomed to seeing. And that's my most
Eh,
intellectual thought that I can come up with at the moment.
I love it. I love it. Amen. You're absolutely right. Absolutely. I love it.
Yeah, and like you said, where to go and where this goes, even within the next few weeks to months. I think, as you said earlier, Steve, as you look back and let's see what the government and the SEC does. Let's see what Robinhood does and these retail investment trading apps, um, and as well as the major investors. I mean, I think everybody is responding, and I think even the individuals who began the social movement, like you said, I think they're starting to realize, wow, I have as much influence as I do, you know, because again, I think even that group is probably taken aback a bit as to the influence they actually had.
Amen.
Absolutely. So what did we miss?
I don't think anything. I think that's been a good conversation right there.
Yeah, I learned a lot. And thank you for setting us off on the right track. Like you said, that's the whole idea of the show sometimes is, like you said, to not only illuminate new perspectives, but also clarify things that we have misinterpreted or didn't understand correctly. And I love that we have the format to do that.
You
Well,
guys are fantastic.
Steve, I gotta say, once again, my brain hurts. Um, I always love when you're on the show because again, it always gets me thinking, and we've all the subject matters that you bring to the table remind me of just how things are changing so quickly. And I mean, my age, being as old as I am, these last 3 years have been so unpredictable, so crazy, and so different. And you just keep reminding me that I got to keep my finger on the pulse of things, and because if we don't, we get left behind. So you remind me that we got to stay in tune. We got to grasp a hold of some of these ideas and some of these thoughts so that again we don't get left behind. Um, it's an ever never changing whatever. Everything's changing so quick and so fast that
Absolutely.
I just can't keep up with it. But again, I'm gonna have to take some Tylenol as soon as we're done here. Sit down and just contemplate on it. But Steve, it's always a pleasure to have you on the show.
You guys are just you guys are so much fun. It's the best way to spend a morning with you guys. Uh, Anytime. I just so enjoy it.
Angelo, reflections, thoughts.
Yeah, you might have to ask me next week for some reflections on this to give me that amount of time to digest it. Here's where I'm going to go with this right at the end. Just to maybe throw out one more question. Maybe it's rhetorical. I don't know. But there was something that was brought up about GameStop, and I'm perseverating on GameStop because I'm a gamer myself, and I love GameStop, and I love physical media, and part of me having no semblance of investing or anything. I just was excited to see GameStop back in a spotlight, like trending on Twitter and stuff. Like the gamer in me, the physical collector media guy was like, yeah, GameStop's back. Um, I know that we kind of, my impression of a question that was asked earlier was, is GameStop going to gain anything from this inevitably, right? It sounds like investment wise or stock wise or that fancy stuff, maybe not. But I wonder, is there other gains that GameStop can make from this? I mean, if anything, they're getting a ton of PR and not even bad PR. And the cliche is like, there's no such thing as bad PR. I don't even think they're getting bad PR here. I mean, they didn't do anything from what I understand. Like they weren't really players in this at all. They're just ancillary. And they're getting all this. I mean, they're trending on every social media. My question, I guess, here for anybody that wants to share insight, could this give an ancillary gain to GameStop that desperately does need attention?
Well, Angelo, look behind you. Yeah, see all those vinyls sitting on the shelf? There was a time when those were considered obsolete, never to come back again, and you see them making a comeback. Maybe that's the trend. Maybe people gamers want to go back to the way it was.
Let me just actually jump on that because I collect both games and vinyl. I just want to say that I feel like music is at a different part of that evolution of that swing right now. I think that music's like right now. I run a music podcast. Like I'm buying crazy vinyl. Everybody, every band, the smallest bands in the world are putting out vinyl because you could press it yourself now. Like you could buy machines to do it. Video games, in my opinion, is actually on the way out. They're on the back end of this thing, on the wrong side of it, where publishers and console makers, they want digital games. They don't have to package it. They don't have to put it on store shelves. They don't have to argue for space in Walmart. So I think it's actually a different monster. The industry's trying to get away from it.
Yeah. Yeah. And like you said, I think I was just in Walmart not too long ago. Like you said, I was really surprised at the amount of uh, vinyl record options that were there. Right. I mean, it was almost an entire aisle of vinyl. Um, so the one thing I do want to touch upon before we leave for our audience, because again, like you said, I mean, we're lucky enough to keep Steve captive for as long as we do at times, because like you said, you do have so much insight. Tell us a little bit about how we can stay connected with you, because I know you are looking to potentially roll out some new projects here, perhaps this year, maybe with your own show, or maybe taking the keys to this show, perhaps.
Well, definitely on my list for 2021, doing more podcasts with you and with your infrastructure, and with school, with the university, of course. Um, uh, and I keep thinking the year of the I'm not sure after discussing the year of the moderate. I'm not sure that is the right one. Maybe it is.
Could be the year of the
Um,
Ferrari. Just saying.
this is just going to be a once again. I could be the year of the Ferrari. That's correct. We know it's going to be a wild year, and I am really looking forward to advancing the podcast ball. I think what you guys are doing is just fantastic. It's really sensational, and I'm glad to be a part of it, and I'm glad to help grow it.
Awesome. Well, like I said, you always have a seat at the microphone here. And like I said, listeners, if you have not yet had the chance to go back and listen to the earlier podcast with Steve, definitely take the time to do that because again, he shed some really great insight, both on TikTok and WeChat, which I said is still ongoing, as well as just looking over the horizon across so many fronts. There's just so much dynamic nature across the industry, across countries, across fields. It's just an interesting discussion. So again, we thank you for joining us again today, and no doubt we will stay in touch with you. And Angelo, I appreciate the word behind you there on the board. Invest in you. Very clever. We like it, and that's what we want our audience to do, and that's what we want to have happen. Because again, like I said, we are here, to have these conversations and explore these topics. Because again, it adds perspective, understanding, and it gives you the opportunity to invest in yourself, to refine, like I said, your own leadership and professional capacities to advance towards whatever it is you're trying to accomplish. So, from all of us here at Take the Hill, we thank you for joining us today, and we look forward to seeing you on a future episode.